Africa's Financial and Economic Landscape, the 3rd of July 2026. Africa's financial and economic landscape on the 3rd of July 2026 reflects a shift from emergency economic stabilization toward more structured and inclusive growth. Across sub-Saharan Africa, easing inflation, improving business confidence, and stronger regional cooperation are beginning to support a cautious but encouraging economic recovery. In West Africa, Nigeria is turning its attention from fighting inflation to accelerating economic growth. Speaking at the Nigeria Employers Summit in Abuja, Finance Minister Taiwo Oyedele said the country has moved beyond the most difficult phase of its economic reforms and is now focused on broad-based, inclusive growth. Economists expect Nigeria's economy to expand by between 4.0% and 4.3% during the second half of 2026, supported by the completion of the 2025 GDP rebasing exercise, which repositioned the country as Africa's fourth largest economy. Despite the positive outlook, challenges remain, with high diesel costs and unreliable electricity supplies continuing to place pressure on food prices and manufacturing costs, even as private sector activity expanded for a fifth consecutive month. Southern Africa also recorded encouraging developments. South Africa climbed 10 places in the 2026 IMD World Competitiveness Yearbook, moving from 64th to 54th out of 67 economies. The improvement reflects stronger government efficiency and rising business confidence. Cabinet also approved the publication of the draft Strategic Petroleum Stocks Policy for public comment. The proposal aims to strengthen the country's energy security by enabling the South African National Petroleum Company, SANPC, to maintain strategic fuel reserves equal to 60 days of net imports, with a long-term goal of expanding reserves to 90 days. In addition, Cabinet submitted the SADC Protocol on Industry to Parliament for ratification. The agreement is designed to help Southern African economies move beyond exporting raw materials by promoting greater regional manufacturing and industrial value addition. In East Africa, Kenya's private sector showed signs of recovery after several challenging months. The Stanbic Bank Kenya Purchasing Managers Index, PMI, rose to 50.0 in June, ending 3 consecutive months of contraction. The improvement was supported by easing inflation, which slowed to 6.4% from 6.7% in May, helping to improve both consumer spending and business activity. Regional trade also reached an important milestone as Uganda launched its first processed beef exports to Ethiopia, highlighting growing agricultural trade under the African Continental Free Trade Area, AfCFTA. Investment activity across the continent remained resilient, particularly in private credit and venture capital. TLG Capital secured a $120 million second close for its African Private Credit Fund, backed by Africa Reinsurance Corporation and Proparco. In North Africa, Tunisia-based Open Startup raised $3 million through a seed investment vehicle supported by KfW's Africa Growth Fund, with a focus on healthcare, climate technology, and artificial intelligence startups. Meanwhile, FSD Africa Investments committed $1.3 million in mezzanine financing to Iungo Capital to expand funding opportunities for small and medium-sized businesses across East Africa. Looking ahead, policymakers and investors continue to stress the importance of consistency and policy certainty. At the 26th Annual General Meeting of the African Trade Insurance Agency, regional leaders agreed that reducing unexpected regulatory changes and providing a more predictable investment environment will be essential to attracting greater long-term foreign direct investment across the continent during the remainder of 2026.